Hey everybody, happy Friday. Here's our first little weekly market wrap up from Gebhardt Group and 401k Masters. What an amazing week we saw with volatility really back in full force. You know, between the markets and the media, there was so much contradiction out there this week. Anybody who's not used to these kinds of roller coaster rides might be feeling a little nauseous by this point in the week. The markets overall finished relatively flat for the week after starting with a huge decline. We saw an incredible rally here at the close on Friday. And I think the reason for this kind of discrepancy in the market, where it started really on the downside and really spiked here towards the end of the week, had to do with some of this contradiction we saw in the news. The headlines were all over the place, back and forth contradicting one another. You know, when I was a kid, I remember the news cycle really being a twice-a-day kind of phenomenon. I remember my dad used to sit and read the newspaper every morning, and really he was getting the headlines from the night before. But if we wanted to get the current headlines of the day, it was an hour long. From 6 to 6:30 was our local news, and from 6:30 to 7 was Cronkite on the national news. Now we live in this 24/7, 365 news cycle that just inundates us all day, all night long. I mean, I could go on my computer at any given time and pull up 15 new news stories that completely contradict stories I may have just read a couple of days ago. Some examples of seeing that this week were just the stories we saw on oil. All the news on oil was how negatively its slide down through $50 and $45 a barrel was going to affect earnings globally well beyond energy shares. And then here we are at the end of the week, seeing oil futures and prices tick up a little bit, and having energy shares and the rest of the market for that matter react explosively to the upside. We also saw some contradiction in the news on interest rates. Earlier in the week, San Francisco Fed president talked a little hawkishly about the need to increase rates to prevent long-term inflation here in the States a lot sooner than we would have anticipated. Yet here at the end of the week, we're seeing articles talking about the hints of some deflationary pressures on our economy right now, where we've seen consumer prices fall the greatest they've ever fallen since 2006. We saw back and forth on European policy on quantitative easing. We saw my favorite article of them all, what I like to call Swiss cheese, and what some in the media were labeling the stinky approach from the Bank of Switzerland, removing the cap on the Swiss currency they call the Swiss franc, and how that's going to affect currencies across the globe. Of course, what was stinky about it was how opposite different markets reacted to that news. Some markets reacted positively, other markets like the Eurozone reacted negatively. So all in all, this kind of controversy that we saw in the media this week really had a profound impact on the amount of volatility we saw in the markets. Overall, they finished relatively flat, but again, it was a heck of a roller coaster ride to get there. Now, I'm happy to report from Gebhardt Group and 401k Masters that we're very specific about the spots we pick for exposures for our clients in our private wealth management practice, as well as the recommendations we make to our 401k Masters members. We have specific exposures to places like utilities and healthcare, financials, consumer discretionaries, real estate, and of course some exposure to both small cap and the broad market overall. So when we look at the spots that our indicators have directed us to, I'm happy to report that it was a much calmer week here at Gebhardt Group than I think it was for your typical buy and hold investor who got to ride this roller coaster ride up and down. So I hope now that the markets are closed, everybody can go on to enjoying their weekend. Have a happy Friday, a great weekend, and we'll see you all next week.